Okay, everyone. Let's start a question on partnership that came in June 24, paper 22, question number 4 in the paper of O levels, CIE. 7707 is the syllabus code. So, Tadeen and Yadid are lawyers, means they are operating in a service sector. In a service sector business, there is no cost of sales involved in the business. There is no inventory, they are just selling their service. So there is no cost of sales section that will be made in income statement. So kindly make sure that cost of sales section is only made in the business that is producing any goods. And in service sector business, there would be no cost of sales, only sales, add other incomes, less expenses and income statement. So I hope it's clear to everyone. Who have been in partnership for many years, the partners provided the following trial balance at 30th April 2024. Debit side of the trial balance, credit side of the trial balance, revenue, salaries, rates and insurance, etc., blah 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 is given. Additional information, let's come on to the additional information first. In exam, always solve this additional information. It says there are certain errors that you need to solve first before making income statement. So always make a habit, solve additional information first and put it on the question in order to do it in the right way, in order to do it in a correct way. So rates, first adjustment number 1, rates and insurance included an amount of 1920 for the year 1st March 2024 to 28th Feb 2025. Over here we need to see when the year ends of the business. The year end of the business is 30th April 2024. So let's make a timeline. 30th April 2024 is the year ending. Must be started 12 months back, that is 1st May 2023. It's a 12 months time period. The year started at 1st May 2023, ended at 30th April 2024. The payment of insurance and rates and insurance were made for the time period of 1st March till 28th Feb 2025. So 1st March must be in between of our year end till 28th February 2025. You have paid extra amount more than the year end amount, so the extra balance would be prepaid, that is prepaid of expense, other receivables in your statement of financial position in the heading of current assets, and the prepaid amount will be found by counting the months, how much extra months have been paid by the business. So after April 30th, you have made a payment till 28th Feb. So it would make May, June, July, August, September, October, November, December, January and February. There are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 months advance payment has been made, that is prepaid closing. To find the amount 1st March till 28th Feb, it would be March, April, May. 12 months payment. Amount of prepaid would be 1920 multiplied by 10 divided by 12. The payment is of 12 months starting from 1st March till 28th Feb. It will be a period of 12 months. And the prepaid is of 10 months. So 1920 multiplied by 10 divided by 12 will give you the amount of $1,600. So prepaid closing will be deducted from the expense because it's an advance payment that is made by the business. It will not be recorded this year. I will deduct this amount from the expense amount. Prepaid of expense will always be deducted from your figure given in the question. So 1600 will be deducted from the rent insurance amount, that is 17320 minus 16. I am writing it over here. When I'll solve the question, I'll deduct that amount from my expenses. Adjustment number 2 says at 30th April 2024, 1800 for salaries were due. Due means accrued, it's a current liability, and you will write under the heading of current liability other payables. The accrued of expenses is always called other payables. It's a liability under the business that they need to pay certain amount as an expense. They haven't paid it yet. So 1800, that is an expense, should be paid this year. It will be added in the income statement under the heading of expenses. So accrued of expenses will always be added, prepaid of expenses will always be deducted from your expense. So in salaries I will add 1800 amount. I hope these two transactions are now clear to everyone. Adjustment number 3, irrecoverable receivables 670 are to be written off. It's an expense of bad debt. Depreciation on fittings and equipment is to be charged as 15% per annum using a straight line method. The straight line method says that depreciation is charged on the cost. So I will find the cost of fittings and equipment and will charge 15% on that. Over here the cost of fittings and equipment is 70,000, multiplied with 15%. You will get amount of $10,500. It's an expense for the year, and this amount will be added to provision for depreciation for SOFP. In SOFP we will always take accumulated depreciation, so I will add this amount in provision for depreciation. To get accumulated depreciation, this answer will be posted in a statement of financial position under the heading of non-current assets. Next up is partnership agreement. Provides for interest on partner's loan would be 6% per annum. That is the finance cost. Will be deducted from operating profit. Interest on loan by partner, interest loan by Tadeen. Loan from Tadeen is $20,000. $20,000 multiplied by 6% will give you the finance cost. That is $1,200. 20,000 into 6% will give you $1,200. $1,200 is the finance cost. I hope it's clear. Interest on drawings will be applied 5%. Interest on capital is 3%. Salary to Yadid is 10,000 per annum. And residual profits and losses are to be shared 60% to Tadeen and 40% to Yadid. 60-40 ratio means it's 3:2 ratio. Okay. So when we make appropriation statement, the ended profit, the year end profit will be split up amongst the partners in the ratio 3:2, 60% and 40%. So I hope all the adjustments are clear to everyone. Let's start with the question. Question asks you to prepare the income statement for Tadeen and Yadid for the year ended 30th April 2024. So starting from sales, they have written revenue 236,350. 236,350 is the revenue. There would be no sale written to this because it's a service business. Only the fee will be charged as revenue or say sales. Next up is okay. Let's suppose at other incomes there is no cost of sales to this question because it's a service sector business. Let's find out, is there any income given in the question? No, there is no other income, so I will write less expenses. Less operating expenses, starting from number 1, that is salaries. 79,800 plus 1,800, you can also write in the bracket in the exam. 79,800 plus $1,800 will give you a total of 81,600. Then after salaries, there were rates and insurance with the adjustment of prepaid, deducting 1,600 from 17320. Rates and insurance, bracket open, 17320 minus 1,600 will give you a figure of 15720. I hope it's clear. Next up is advertising. There is no adjustment related to advertising. You will write the same amount, 16730. 16730 for advertising. Next up is office expenses 6150. After office expenses, interest on loan from the Tadeen is the finance cost, depreciation of fixings and equipment. Write completely in exam. Provision for depreciation of fittings and equipment that came $10,500. Next, all done from here. In addition information, there were irrecoverable debts of 670. I'm writing it again over here. Irrecoverable debts 670. All the expenses are done. Add them together. You will get a total of 131370. Deducting it from revenue, we'll get the operating profit, which means profit before interest and tax. It will be 104980. I hope it's clear to everyone how I have found operating profit in this question. After that, you need to make another heading of less finance cost, which include interest cost, interest on loan by Tadeen, which was $1,200. Deducted from operating expenses, you will get profit for the year. Part A of this question is now done, which is 103780. We have got 8 marks over here by drawing up income statement of Tadeen and Yateen. Next up, they have asked you to draw an appropriation statement of Tadeen and Yateen. So in this question, I will start my answer from profit for the year, which is 103780. The answer which I found in part A, 103780. Okay. So using the format which I had explained it in the theory as well, add interest on drawings Tadeen and Yadeed. To save time, I am just writing their initial. You need to write a complete name in the exam. So the drawings of Tadeen were 34,300, Yadeed 46,500. I will put an interest of 5%, which is given in the question. So for Tadeen, it's 34 300 and 46,500. $46,500. Multiply this with 5%. You will get 1715 for Tadeen and 2325 for Yadeed. Add them together. 4040. Add that into the profit figure. You will get answer of 107820. After interest on drawings, you have to deduct interest on capital. Tadeen and Yadeed, interest on capital was 3%, and the capital of both the partners are 125 and 85,000. So for Tadeen, 125,000 multiplied by 3% and for Yadid 85,000 multiplied by 3%. The answers you are going to get is 3750 for Tadeen and 2550 for Yadid. Add them together, you will get 6300 deducted from profit figure. You will get 107,820 minus 6300. You will get 101,2520. 101,520. After that, you need to deduct salaries, which was given to Yadid, $10,000. Salary to less salary to Yadid, $10,000. You will get a remaining amount of 91,520. So this is a leftover profit that needs to be split up between the partners, and the ratio of profit and loss was given at the rate of 3:2, 60% and 40%. So you will write share of profit because the answer is in profit. If the answer is in a loss, it's a negative figure, it will be written share of loss. 60%, 40% for Tadeen and for Yadid. $91,520 multiplied by 60%, or you can also write 3/5, and for Yadid 91,520 multiplied by 40%, or you can either write 2 divided by 3. So 60% of 91,520 will give you 54,912 for Tadeen, 36,608 for Yadid. And the total of this would be 91,520. So in this particular question, we have understood how to make income statement and how to make appropriation statement of partnership. I hope it's clear to all of you. Let's also solve a theory question over here. Part C. State one reason why the partners might consider reducing their drawings. Why do they withdraw less than they were withdrawing before? For example, to avoid a debit balance on their current account. Whenever a partner withdraws from the business, it reduces their income, it reduces their current account, it might go into a debit. So to avoid that, they can consider reducing their drawings. To which accounting principle reflects the partner's intention to continue trading indefinitely? That is going concern concept. I will make a separate video onto that. The accounting concepts, there are different accounting concepts, approximately 10 to 12 accounting concepts in your syllabus, so I will make a separate video to explain these. So in this particular question, we have understood how to make an income statement, how to make an appropriation statement. I hope it's clear to everyone. In another question, I will try to make a current account as well, a capital account as well, or SOFP format as well, in order to explain it and make it easier for you all to understand. Okay everyone, let's start with another question on partnership. That is November 15, paper 21, question number 3. Again, the syllabus code is 7707. Before 2019, the paper was called Principle of Accounts. Now, after 2019, they call it Accounting. So, it's a previous paper, November 15. Question is moreover same on partnership. Let's begin with the question. Question says, Aina and Barry are in partnership. The partnership agreement states the following. Interest is charged on drawings at 6%. Interest is paid on capital at 4% per annum. Interest is paid in partners loan at the rate of 5%. That is finance cost to the business. Barry receives a salary 8,000 per annum. Profit and losses will be shared 3/5 to Aina and 2/5 to Barry. So it means the ratio is 3:2. Okay. The following information was available on 1st May 2014: capital account balances, current account balances, loan to partnership by Barry $40,000 on which we are going to apply interest rate of 5%. So 40,000 into 5% will give you a finance cost of $2,000. Let me recheck it again. 40,000 into 5% will give you $2,000. Additional information says for the year ended 30th April 2015, Barry increased his capital in the partnership by 20,000 on 1st November. Now dates are important. Capital was introduced on 1st November and the accounting year ends at 30th April 2015. So on this particular capital we are going to charge interest on capital by counting the months as well. So starting from November, December, January, February, March and April. It is total of 6 months, so interest will be charged for the time period of 6 months on this particular $20,000 which was invested in partnership by Barry. I hope it's clear. So dates are important in exam. Whenever they are giving you dates, kindly check the year end of the business and then count the months for interest charge payments, and it also comes for prepaid and accrued expenses as well. Drawings during the year were Aina $7,500, Barry $10,000. Profit for the year before loan interest. So profit before loan interest is called operating profit. So they have given you operating profit of $19,800. So at first we are going to deduct finance cost from it, then we are going to make my appropriation statement if they are asking us to make. Requirement number A, prepare the appropriation account for the partnership for the year ended 30th April 2015. Appropriation account for the year and Barry starting from operating profit. They have given you operating profit, so I am starting my answer from operating profit, that was 19,800. Less finance cost, that is interest cost. Interest on loan by Barry, you can show it in a bracket as well as the working. $40,000 into 5% will give you $2,000. When you deduct it from 19,800, you will get 17,800. That is your profit for the year. So continuing after this, we are going to follow the format of appropriation statement, starting from add interest on drawings. I am writing short forms over here. You have to write full sentence, full form in the exams. Okay. So first is Aina, another partner was Barry. Drawings were 7,500 and 10,000, and the interest on drawings were 6%. $7,500 into 6%, $10,000 into 6%. It will give you 450 for Aina and 600 for Barry. Add them together, you will get 1050, and you need to add that in profit for the year figure, which becomes 18850. I hope it's clear. Next up is less interest on capital, Aina and Barry. Now the Aina's working would be simple because the additional capital was introduced by Barry. So Aina's capital was same at $50,000 and the interest on capital was charged at the rate of 4%. So 50,000 into 4%. You will get $12,000 for Aina. For Barry, the starting capital on 1st May 2014, when the year started, the Barry's capital was $20,000. So for $20,000, this capital amount was invested for the entire year. So I will charge 4% interest on that amount plus additional capital of $20,000 into 4% into 6 divided by 12. So that was the additional capital which was introduced on 1st May. Comprises a period of 6 months till year end. It will be charged at the rate of 4% for half year. Multiply by 6 divided by 12 will get answer of 6 months. Add them together, you will get $1,200. 2000 into 4% will give you 800. I'm writing it over here for reference, plus 400 for 6 months. Total is 1200 for the entire year interest on capital of Barry. I hope the transaction is clear to all of you. Add them together, 3200. Deduct it from profit amount. You will get 18850 minus 3200, 15650. So less salary which was given to Barry, $8,000. I'm mentioning the name Barry over here for current account reference. Deducting $8,000 from the answer, you will get remaining residual profit of 4650 that will be split amongst the partners. So share of profit, in the ratio of 3:2 which was given in the exam. Partner A, partner B. Partner A's share would become 7650 multiplied by 3 divided by 5. For Barry it is 7650 multiplied by 2 divided by 5. So for Ana you will get 4590 the share of profit, and for Barry it is $3060. The total would become 7650. That is a share of profit, the total of share of profit, residual profit, that is split up between these two partners, Ana and Barry. Continuing with the question, in the next part, prepare the current account of the partners for the year ended 30th April 2015, balance the account and bring down the balance on 1st May 2015. So starting from, and they have not given you the column of dates, so ignore it. Let's say the balance BDs of current account. Where is it? It is given in the start of the question. The 1st May current account balance for Ana is on the debit side and for Barry it is on the credit side. So I will write $800 on the debit side of Ana's column. And for Barry, the balance brought down was on the credit side with $6,500. I hope the start is clear to all of you. Then just follow the format, or I have also explained it in the lecture that current account is an income account of the partner. It increases on the credit side and decreases on the debit side. So whatever elements increases the income of the partners will be recorded on the credit side, such as interest on capital, salary, interest on loan, share of profit. I'm just writing short forms over here to save up time. You need to write it complete in the exam paper. Kindly do not make a habit to write short forms in exam. It will not be count correct. Okay. So interest on capital of both the partners were already found in appropriation statement. You just need to put it in the question. Solution of current account, interest on capital was 2000 and 1200. I will write 2000 in Ana's column and 1200 in Barry's column. Salary was given to Barry, $8,000. Interest on loan was given to, the loan was from Barry. So interest on loan will be given to Barry, that is $2,000. And share of profit were in part A 45903060. 45903060. So the credit side is done. Debit side, the income's decreasing parts, that is total drawings along with interest on drawings. So total drawings were 75 and 10,000 and interest were 450 and 600. 7,500 for Anna, 10,000 for Barry, 650 interest on drawings were given to Anna, and $450 were given to Anna, and $600 was given to Barry. So debit side is also done. Now we have to balance it off. Anna's credit side is looking light and debit side is looking heavy. So the total of the debit side is let's use another color over here to balance the account. The debit column of Anna is greater, is higher. So I am writing 8750 over here. Should be 8750 on the credit side as well. The balance CD would become 2160, which would become balance BD of next year 2160 on the debit side. And then for Barry, again credit side is heavier and the debit side is lighter. So the total of the credit side is 20760. Deducting 10,600 from here, you will get the balance CD amount, that is 10160, become balance BD on the credit side. Current account is also done. So the interpretation of current account is that Anna's balance BD is on the debit side, means Anna has withdrawn more than the actual income earned, and the balance BD of Barry is on the credit side. It means Barry can also withdraw 10160 additional out of the business because the income is positive. Barry has withdrawn less than the actual income he or she has earned in the business. So in your SOFP, when you make a finance bisection, you use capital account, Anna's and Barry's account, and another is current account. For Anna and Barry, Anna's balance BD is on the debit side, you will write 2160 in a negative, and balance BD of Barry is on the credit side, you will write 10160 in a positive. So I hope it's clear. For SOFP purpose, you need to show your transactions correctly by following the relative correct coefficients. Balance BD on the debit side would be a negative figure and balance BD on the credit side would be a positive figure. The capital balances were given in the question, you need to put it over here and you need to balance your SOFP in the exam as well. It's a simple topic to understand. Okay everyone, let's start another question on partnership. In this question, I'm going to explain how to make current account in statement of financial position. It is also part of your syllabus. They ask you to make current account in your SOFP, statement of financial position. So how to solve it? Let's solve this question. That is November 22, paper 22, question number 5, syllabus code is 7707. So let's start with the question. Sian and Tom are in partnership, sharing profit and losses in the proportion to capital invested. Interesting question. The amount of capital invested, you will find a ratio from that. The partnership agreement states the following: interest on capital is 6%, Sian is allowed a salary of 20,000 per annum, interest on drawings is 3%, charged for each proportion of the year. It means if you withdraw any amount within the year, any month after start of the year, you have to find the months to charge relevant interest on drawings on particular drawings of the partner. The profit for the year before appropriation for the year ended 31st March was 59,190. Drawings were made during the year. Sian and Tom, 1st April 2021, 1st October 2021. The capital account balances on 1st April were 150 to Siam and Tom $100,000. So if I find a ratio out of this 150,000 to ratio 100,000, cut. So I'll get 15 and 10 divided by 5, 3 divided by 5, 2. So the ratio of partnership profit ratio split would be 3:2. I found it by using capital balances and found out the ratio that should be used in your question to split profits as to profits amongst the partners. So I hope it's clear to all of you. So let's begin with the appropriation statement. We have also solved a couple of questions to explain it. Let's solve it quickly. Starting from profit for the year, which was given 59190. 59190, add interest on drawings, Sian and Tom. The year started, ended on 31st March 2022. Going 12 months back, must be started on 1st April 2021. Okay, that is a 12 months period of this particular question, starting from 1st April 2021, ending at 31st March 2022. So these drawings on 1st April will be charged for 12 months, and the drawings from 1st October 2021 till 31st March will be October, November, December, January, February, March. So 6 months are over here. So these drawings were charged for the time period of 6 months. So timelines are important in exam. Kindly make a timeline, a rough timeline, to get the correct answer in your workings. So starting from 8,000 and 10,000. 8,000, 10,000, multiply it by interest percentage, that is 3% for the entire year, plus 6,000, 12,000, multiply by 3% will give you, for the whole year interest will be charged at the rate of 6, will be charged for 6 months time period, multiply by 6, divide by 12. So adding them together, you will get 330 for Sian and 480 for Tom. Add them together, 810, added in profit, you will get $60,000 after interest on drawings, less interest on capital, Sian and Tom. Capital balances were 150, 100,000, and the rate of interest on capital is 6%. It's simple. 150,000 into 6%, 100,000 into 6%, 15,000, sorry, 9,000 for Sian and 6,000 for Tom. 15,000, minus it from your profit figure, you will get $45,000, less salary, which was given to Sian, $20,000. You will get $25,000. Residual profit will be split up in partners. Share of profit 3:2. Sian and Tom, $25,000 into 3 divided by 5. $25,000 into 2 divided by 5. 15,000 share of profit will be for Sian, and 10,000 of share of profit will be given to Tom, and the appropriation statement is done. You will get 8 marks over here. So we have already solved it previously, so it's easy to understand now. Different workings would be there. Share of profit working might be different. Interest on drawings might be for different months, so you need to follow the question correctly. Now coming on to the next part. In this question, they haven't asked you to make a separate current account. They ask you to make it in a statement of financial position. It's also part of syllabus. You need to understand how to make current account in your SOFP. So let's begin with the question. The balance BDs of current accounts are given. 3,000 credit for Sian and 7,000 debit to Tom. So starting from Starting with the requirement, prepare the extract from the statement of financial position of Sian and Tom that shows the capital account and the full detail of current accounts at 31st March 2022. So they are only asking you to make finance by section of partners, not the complete SOFP, not starting from non-current assets, only the specific part of finance by section. So extract means only show the relevant part that is being asked. So I am starting my answer by writing finance by capital number 1 of Sian and of Tom. Sian capital was $150,000 and for Tom it was $100,000. Add them together, you will get $250,000 of capital of the business. Now coming on to the current account, Sian and Tom. So how to present it in your SOFP? First, you can use this space, or to make it more easier to understand for examiner, use the columns which was given. I am using first column for Sian and second column for Tom. I hope it's clear to all of you. So let's start with balance BDs, which was already given. 7,000 for Tom, 3,000 for Sian. Credit means a positive balance and debit means a negative balance. So I'm writing a bracket over here for Tom. Now use the figures from appropriation statement. Interest on drawings will be deducted. It's income that is being withdrawn by the partner. So interest on drawings will always be deducted from the current account. It's income that is going down. So interest on drawings 330 and 480 will be deducted. $330 for Sian and 480 for Tom. Total drawings will be deducted. I am using a debit column figures first. Drawings were total drawings of Sian was $14,000 and for Tom it was $22,000. So I am using the total figure over here. 14,000 for Sian and 22,000 for Tom. I hope it's clear. Now, credit side figures of your current account, which shows the income that is rising of the partner for the year ended 31st March 2022. So I am writing interest on capital, that was 9,000 and 6,000. Salary which was given to Sian 20,000 added into the current account, and lastly your share of profits which was 15,000 and 10,000. 15,000 for Sian and 10,000 for Tom. So all the figures are adjusted of the current account. You can total it off. You will get a balance CD figure for Tom and for Sian. So $3,000, starting a positive figure, 3,000 minus 330 minus 14,000 plus 9,000 plus 20,000 plus 15,000. You will get a positive figure of 32,670, which shows it's a credit balance. Balance CD is on the debit side and balance BD on the credit side. It's a positive figure, a positive income figure of for Sian. For Tom, starting with negative 7,000 minus 480 minus 22,000 plus 6,000 and plus 10,000. You are getting a negative figure of 13480 for Tom. So this is an alternate way to present your current account in a statement of financial position. It's part of syllabus again. You need to show it in exam like this. So add them together. 32,670 minus 13,480. You will get a net figure of current account, that is 19190. Add them together on the capital figure. You will get the balancing figure for this particular question for 8 marks. Plus $250,000. The final answer is 269,190. So I hope it's clear to all of you. It's an alternate way to present current account in form of statement of financial position. Just follow the format. The debit side figures will be deducted and the credit side figures of current account will be added, which shows the credit income increases on the credit side and the income decreases on the debit side of the partner. And starting from balance BDs, you will come adjusting all the figures, find the total net value. That would be a balance CD figure, which was 32,670 for Sian and 134,480 for Tom. So I hope the lecture on partnership is clear to all of you. We have discussed in pretty much detail. I have solved 3 different questions to explain it better with different workings. You can solve other questions as well. If you have any query, you can drop me a message. And if you like the video, kindly like it, share it, and press the ring bell icon for upcoming videos. Thank you so much.